and thank you so much for joining us today. My name is Sheila Whitley. I'm the Chief Sustainability Officer at the UN Principles for Responsible Investment, and I'm really excited to be co-hosting this event this afternoon with the UN Environment Programme's Finance Initiative. Just to give you a little bit of background on the PRI for those of you who aren't aware, the PRI was formed in 2006 out of the UN system by a dedicated but small group of asset owners who were really keen to bring sustainability to the capital markets. Today, we work to represent the global responsible investment space with close to 5,000 signatories and almost 120 trillion in assets under management. These signatories sign on to our 6 principles for responsible investment, and we'll speak to you a little bit more throughout the panel, and we have a number of the panelists who are representing our signatories about the different initiatives that we work with them on. It's a real honor to be able to speak with you today and to begin the discussion with a focus on where we are in terms of progress towards reaching the goals of the Paris Agreement. We're coming to a pivotal period for climate change and net zero. People around the world, whether directly affected or not, are increasingly feeling the impacts of climate change and that they're closer and closer to home. These extremes range from devastating floods and storm surges to record heat waves and droughts and forest fires. I'm originally from Canada, and speaking to my mother over the weekend, she said how focused they've been on watching the weather events that have been happening along the east coast of North America, with the significant impacts that we've seen from Hurricanes Fiona and Ian. I think an increasing number of people around the world are having these conversations, with extreme events leading to such tragic losses of life, along with losses to businesses and to properties, with questions mounting now on how to rebuild and where, and to ensure resilience. At the same time, we live in a time of deep energy transition. The escalation of the war in Ukraine means that besides the devastating human impacts of the war, energy security and the transition away from fossil fuels is front of mind for both policymakers and investors. And within this context, our goal to achieve emission reductions in line with the Paris Agreement has never been more urgent. The Intergovernmental Panel on Climate Change and the International Energy Agency have made it very clear that keeping global warming to 1.5 degrees compared to pre-industrial levels is still within reach, with wide-scale and immediate action needed now to ensure that this goal does not slip away. This requires a whole-of-economy response, and investors have a critical role to play. In Europe, the IEA's 10-point plan and the European Commission's own plan offer wide-ranging and practical proposals for reducing dependence on Russian gas, as well as scaling up the clean energy transition. Further afield, recently we've seen the US pass $370 billion Inflation Reduction Act. And it's estimated that this will help the US cut emissions by 40% below 2005 levels by 2030. And that these investments and tax incentives by the US government will speed the deployment and lower the costs of clean energy infrastructure and manufacturing capacity. Further action in the US has swiftly followed, most recently with bipartisan support in the Senate for ratifying an amendment to the Montreal Protocol to cut the use of greenhouse gases linked to refrigeration and air conditioning. These 2 actions have put the US back in the game in terms of domestic and international efforts to address climate change. And overall, we're seeing wider-ranging progress on climate, including Switzerland. Around 130 countries representing 90% of global GDP have made net zero commitments, and 190 countries are signatories to the Paris Agreement. More than 10,000 non-state actors have joined the Race to Zero campaign and committed to achieving net zero by 2050. At PRI, we're working very closely with our signatories to drive investor action on climate. As you'll hear more in the panel discussion, the PRI leads or co-leads, including along with UNEP FI, net zero initiatives for investors across the financial system. This includes asset owners, asset managers, service providers, and investment consultants. These members of net zero initiatives are leading the way on setting ambitious net zero targets and are starting to demonstrate progress against them. The Net Zero Asset Owner Alliance has reported on its progress during Climate Week in New York in September, and that's included a tripling of climate finance investments and a doubling of assets under management that are covered by sub-portfolio targets, with a value of $3.3 trillion. Similarly, we expect 90 new targets to be set by members of the Net Zero Asset Manager Initiative prior to COP27 that's coming up in Egypt. And the first set of members will also be reporting on their investor climate action plans, outlining steps they're taking across asset allocation, policy engagement, and stewardship and disclosure and governance. Investors, as you can see, hold a range of key levers to take action on climate, and we're working with our signatories across all of them. In terms of stewardship with investees, they can seek to enable change amongst the highest emitting companies as they're doing through Climate Action 100+. There's also a role to play through policy engagement, which PRI has been facilitating. This includes feeding into key consultations, as we've seen, on climate disclosures most recently, and also work we're doing on the legal framework for impact around the world. We still have a long way ahead, and we need more investors to take action on climate. We hope that today's conversations will really give you a glimpse of how net zero initiatives are contributing to these goals, but also how you might be able to get engaged in the conversation and think about ways to get involved. I'm very grateful to our hosts and to the panelists who, as I said, included a number of our signatories who are going to share their experience with you, and I hope you feel open to come and ask us and the rest of them questions if you're interested to learn more at the end of the conversation. I'll now hand over to Eric Usher from UNEP FI, who will provide further context on the work of net zero in the finance sector. Thank you very much.
Thanks very much, Sheila, and great to be with you all today. Pleasure to be at Building Bridges, do we say 3.0, is that right? It's really wonderful to have it coming together. Zoom and Teams and all that stuff is nice. We've learned some new skills, but physically getting together now and then, I think we all understand the importance and the value that it provides. Now, Sheila has outlined very well that the science is quite clear. The takeaways from the latest IPCC report are irrefutable and unambiguous. The world needs to take urgent action to tackle climate change and to limit warming to 1.5 degrees Celsius above pre-industrial levels. No longer is this a far-off threat, and I think most of you probably would remember in 2015 when Mark Carney at Lloyd's of London gave his famous Tragedy of the Horizon speech, the tragedy being that the private sector does not operate on business horizons that align with this societal risk. Now, in many, for better and for worse reasons, the tragedy really is no longer an issue because that horizon has arrived today. As we're hearing daily in the newspaper, the hurricanes, the floods, typhoons, most people around the world today see it on their doorstep in one form or another. That's one side of the horizon arriving. The other side, in terms of the transition risk, is we are seeing policy being enacted, and we are seeing changes happening within the business cycle. So case in point, the internal combustion engine is history in Europe from 2035, in the UK, in California. We just heard New York is joining California. The dominoes are shifting. The automotive industry has been turned upside down, and we should actually be talking about the mobility industry as we know we think about what is the purpose of such an industry, why are people using it, and are there other ways of doing things. As we know, it's hard to keep track of the capitalization of the figures, but one company that's still in the auto industry, a startup, is worth more than the rest of them put together. And you know who that is? You might question the valuation, but the reality is that industry has been turned upside down. And there are not many other industries where the same hasn't or won't occur shortly. Steel, cement, building and construction, agriculture, the food system, almost every industry that you all are involved with in one way or another is changing, including, of course, the finance industry. We believe at UNEP FI that the financial system is an important catalyst for building more sustainable economies. It's not about waiting. It's not about waiting to be regulated to do it. It's not about waiting for the companies that you work with to initiate the change. That you are an actor of change, and you can lean in, be a change maker, not a change taker. I think the net zero agenda shows that so clearly. We understand the data is not all there. The frameworks are not all clear and unambiguous, but the need to get started is so clear. And this is what really gets us seeing the power of the finance industry, how they are leaning in, how you all are really playing different roles, critical factors in showing a finance sector fit for change. We have 90% of global emissions from governments are now within net zero targets, but we understand government commitments and translating them into policy action. There's a lot of work to be done there, and it's not easy, and it's political. And it needs reinforcement, not only from the electorate, but also from industries. And I think the finance sector plays a really important role to be able to follow on, understand the challenges that governments have, show it how it can be done, be a partner for change. And the Global Financial Alliance for Net Zero is an umbrella where that is starting to happen today. We at UNEP FI, we're pleased to be working with the PRI in jointly convening the first of the Net Zero Alliances, which was the Net Zero Asset Owner Alliance, which was launched in 2019. Got a head start, and it's still out in front on many factors. It's also at the top of the investment chain, and so it has a very important impact, I think, on the whole financial universe. We also convene the Net Zero Insurance Alliance. Insurers have been real leaders on the investment side, and they now, in terms of underwriting, are really moving quite quickly now, coming together to figure out how do we get the methodologies right to put in place frameworks for not only finance emissions, but enabled emissions. What does it mean to be an insurer? What role do you play in helping industry, helping communities make the shift? And we also are the convener of, on some measures, the largest alliance, which is the Net Zero Banking Alliance. And it's a very global grouping. When it launched, we had the 10 largest banks in Europe who were signed up. We also have the 10 largest North American banks. Now, I'm also, it so happens to be a Canadian, like Sheila, and I know how Canadian banks, they have a lot of stuff on their balance sheet which poses problems to this agenda, and yet that hasn't stopped them from leaning in and realizing that there's no excuses, there's no reason why we can't be working forward to understand our clients' needs, and how best we can help them with this transition. We're moving, coming up to COP27. There will be very large expectations, and I think most of them will not be around setting more targets. It'll be around the implementation. It's show me the money. Show me what the change is going to be within your portfolio, within your products and services. So it's all about progress. We're very pleased that the Asset Owner Alliance put out, once again, a very important second annual progress report showing the progress that's being taken. I believe it's 7.1 and 7.2 trillion of assets are now under firm targets for 2025. It's 3 years from now. And it's very ambitious, it's very, very challenging, and these investors are really out in front. I mentioned the Insurance Net Zero Insurance Alliance. They are working day and night to put in place the methodology. They're working with PCAF, with SBTI. Haley and her team at Zurich hosted a group a week ago in Zurich to try to get the frameworks that are needed to set a target-setting protocol for insurance, for the net zero insurance. So good progress being made there. On the banking side, I believe it's 65 of the 115 Net Zero Banking Alliance members are due to issue their first round of targets by the time of COP. 61 have done so. You can find these. These are publicly available. Targets for 2030. But the reductions, once again, they're very challenging. To just give you an order of magnitude, many of them, they choose which sectors they set their targets for. Over 36 months, they have to set targets in all 9 high-emitting sectors. But initially, they can just issue them in the priority sectors where they're first putting their efforts. A lot of them are looking at energy, power, automotive, aviation, and orders of magnitude reductions in the order of, in the energy sector, 30% reductions by 2030 on an absolute emissions basis. Power sector, 60% or even more reductions by 2030. So a 2/3 cut in emissions. what is that going to mean? And that's on an intensity basis, and some will question why intensity versus absolute. But I think it'll give you a pretty good idea that on the coal debate, there is a large-scale movement away from coal. Whether it's going to be total, whether it's partial, there's a lot of devil in the detail. But basically, if you want to reduce the intensity, you got to get away from coal. You got to heavily invest in renewables, and this is essentially what we're expecting. There are a lot of complications, including particularly in Europe today. However, we're in the mess in Europe that we're in because of an over-reliance on fossil fuels, and we believe it's critical that we don't repeat that mistake again. We need to think about the long term. We need to be investing in the right sectors. So I'm going to leave it at that. This is just the opening, and really looking forward to a dynamic conversation because this is a fast-moving topic. However, before I do so, I do want to hand it over. We have Mark Carney, who's going to give an intervention. Mark, as I assume almost everybody in the room knows, has been really the lead conductor in getting the financial sector to step up. Governor of the Bank of Canada, Governor of the Bank of England, Chair of the Financial Stability Board, and within the UN as UN Special Envoy for Climate Finance, really the driver that has established Gfanz and has given them the high-level ambition. It's the light on the hill that we see has really helped mobilize all parts of the financial industry to get the job done and in the short time that we have available. With that, I hand it over to Mark. Put that up.
Hello, it's a great pleasure to join you today for this important event between Building Bridges and UNEP FI. I'm here representing the Glasgow Financial Alliance for Net Zero, or Gfanz. And as you may know, it's a coalition of over 500 leading financial institutions who are committed to accelerating the decarbonization of the economy. Gfanz brings together a series of sectoral alliances, 3 of which are managed by UNEP FI. And this is just part of UNEP FI's long-standing leadership of and its deep expertise in climate finance, and that's absolutely pivotal if we're going to have a zero-carbon future. So thank you for all you do, Eric and colleagues. Now, we're meeting at a critical juncture. It's just over a month until Egypt's COP27, and we're already more than a quarter of the way through what must be the decade of delivery of the net zero transition. So I want to start by outlining what private finance can do to accelerate this and what we're looking to deliver for COP27 in Sharm el-Sheikh. Specifically on that last point, Gfanz is aiming to do a few things. First, to provide a global pan-sector framework, so across all financial sector elements of the financial sector, and a framework for transition planning by those financial institutions that includes guiding principles for what a good transition plan looks like and what we expect will ultimately be mandatory standards for the industry. Secondly, the supporting tools, including guidance for financial institutions on the use of sectoral pathways and sector briefs for several high-emission sectors, as well as a framework for managing the phase-out of high-emission assets. And thirdly, foundational enhancements of transition data and metrics, including a blueprint for net zero data public utility that will make data available on scope 1, 2, and 3 emissions, on targets, and on carbon credits, as well as enhancements to portfolio alignment metrics. Now, these are all tools that financial institutions need to support an orderly transition. But within this, there are several imperatives. First and foremost, financial institutions need to accelerate their own transition planning. They'll benefit, just as they did with the development of the TCFD, from being able to compare and share experiences and overcome challenges, common challenges, through collaborative events such as today's session. And the sectoral alliances will play an instrumental role in supporting firms to make progress and address issues. Secondly, as we emphasize in our framework, the transition cannot be about decarbonizing portfolios. It must be about decarbonizing and transitioning the real economy. And this requires financial institutions to finance not just the already green or climate solutions, important as those all are, but also to engage with high-emission companies as they enact their transition plans and to help to support the managed phase-out of high-emission assets. Thirdly, emerging and developing economies need up to $1 trillion a year of additional clean energy investment by the end of this decade. We all know there are a series of long-standing barriers to address, and this will require unprecedented public and private collaboration. But there's a window of opportunity given the commitments of the financial institutions, which is why Gfanz is actively supporting JET-P initiatives and country platforms in a number of emerging and developing economies. And finally, and squarely consistent with your discussions today, the financial system can do a lot to catalyze and accelerate an orderly transition, but there's a limit to what it can do absent governments undertaking their own transition planning, implementing the right policies. So ahead of COP, we're going to highlight the steps that we think governments should take, ranging from supporting the ramp-up in clean energy investment to working with the private sector to operationalize carbon markets. Through our efforts, we're driving transparency and accountability. I mentioned that net zero data public utility. It's being built in partnership with the OECD, the IMF, the UN, and the French presidency. And when it's up and running by this time next year, this open source data platform will provide all stakeholders, including financial institutions, with the essential data they need in order to accelerate the transition. I would encourage you to provide feedback on this platform through our Net Zero Data Public Utility white paper that's currently out for consultation until the 20th of October. So let me conclude by thanking UNEP FI for hosting this important event, and in the spirit of building bridges, looking forward to collaborating with all of you to align the financial system with net zero emissions by 2050 and delivering the planet that those who come after us deserve. Thank you. Hello, it's a great pleasure.
So thank you very much again for joining us. My name is Nico Horvat, Head of Climate at PRI. Following this message from Mark Carney, my colleague Remco from UNEP FI and I will just give you a little bit of grounding on the net zero space, what these initiatives are, and then we'll move into a panel discussion following this in terms of how these are operationalized and how initiatives are moving forward on demonstrating progress. So what are net zero initiatives? They're essentially commitment and implementation spaces on net zero. There are opportunities for investors and other actors in the space in the financial sector to work together and implement their commitment to net zero. And they are set within a broader landscape. They're embedded across the UN and other non-state actors. And I just wanted to highlight two key players here, which are Gfanz, that we've heard about earlier today and that we'll hear about more during the panel discussion, but also Race to Zero. So Race to Zero is essentially the gatekeeper for net zero initiatives and net zero alliances across all non-state actors, and sets minimum criteria in order to be accredited by Race to Zero, which is a campaign of the UN Climate Champions. The group that reviews applications is called the Expert Peer Review Group, and essentially it serves as this gatekeeping role that I mentioned. The other key actor to be aware of and to emphasize is, of course, Gfanz, which really served to mobilize and accelerate progress on net zero within the past year and a half. And this is a pan-finance forum for collaboration on cross-cutting issues. And you will see some of the key areas that it focuses on around this work plan period. So what are these net zero initiatives, sector-based net zero initiatives that we're talking about here? You'll see the main ones that PRI and UNEP FI are currently involved in convening on the screen. And there are really three key takeaways that I wanted to emphasize about this slide. One is that there are net zero initiatives available for actors across the financial sector. So you'll see that initiatives range from asset owners, asset managers, all the way to financial service providers, banks and insurance companies as well. So no matter what sector you're in, there's a space for you to make a commitment and get involved. The second element that I wanted to emphasize, that Eric and Sheila also referred to, is really that these initiatives are at different stages currently, which presents an opportunity from both sides of the coin. First, the Net Zero Asset Owner Alliance, which is really the first alliance that was formed, is very well established. There's a target setting protocol in place that is undergoing yearly revisions and very strong working groups, as you see on the screen as well. So it's a great opportunity for new members to join, to be able to learn from others who have gone through the target setting process already. On the other hand, there are certain alliances that are currently forming their target setting frameworks, and that's also an exciting opportunity to join some of those alliances now in order to help shape those frameworks going forward. So a great example of that is the Financial Service Providers Alliance that is currently working on their target setting frameworks as well. And the third piece I wanted to emphasize, which is not directly covered on the screen, but Eric referred to earlier as well, that we have some of the biggest players already involved, which is fantastic. But we also have some smaller asset owners, asset managers, smaller players across the field, and also wanted to encourage those actors to see that it is possible to engage with these initiatives, even as smaller players. So one of the recent examples from the Asset Owner Alliance, for example, is the Sovereign Wealth Fund of Gabon that recently joined as well. So there's an opportunity to join no matter what size your institution is. So just wanted to emphasize that. So why to align to net zero? So our panelists will discuss some of these later on as well, but really these are not mutually exclusive. Some of the examples that we hear from members are around fiduciary duty, of course, reducing the exposure to physical and transition risks, as well as the expectation of additional return from new investment opportunities, clients and beneficiaries' demand and requests, shareholders, both in terms of shareholder resolutions and shareholder requests, as well as the responsibility as an institution to society and the outcomes that you're looking to shape. So these are some of the reasons that we hear from members in terms of why they're choosing to commit to net zero. But we'll hear more about these later on as well. And then finally, before I hand over to Remco, just to mention briefly, how can portfolios align with net zero and the Paris Agreement? Again, as a reminder, across all the initiatives, our goal is to support the implementation of the Paris Agreement. And portfolio alignment is one key piece of this, although as we heard from Mark Carney, not the only one. But of course, it's key to get started on this piece as well. So how to do this? First, understanding the current portfolio relative to a less than 2 degree pathway, and then merging onto that pathway using a number of tools that we will hear about later this afternoon. And the key here is, on the second chart that you'll see, is of course the focus on decarbonization is key, which is combined with both decarbonizing high-emitting assets, but investing in low-carbon assets as well. And with that, I'll hand it over to Remco, who will go through some of the specific steps in order to implement this.
Thank you very much, Eniko, and thank you to the previous speakers. My name is Remco Fischer. I am the climate team lead at the UNEP Finance Initiative. And what I wanted to do was to make things a little bit more practical in terms of what does, for financial institutions, this journey towards net zero really look like? What are the practical steps that they need to think of, that they need to put in place on this journey towards net zero? And what are the complexities in each of these steps and the trade-offs and the various, the difficult questions that need to be navigated? So you see the 5 steps, a model of 5 steps provided here. Firstly, what needs to happen is the exact level of ambition needs to be clarified and established. Net zero by 2050, okay, in some developing countries, emerging economies, actually the level of ambition may be a little bit later. what's the exact emissions path that is being committed to, and what parts of the portfolio are being exactly committed to that path. Number two, 2050 or 2060 or 2065 or for net zero or whatever it may be is very far away. It's imperative that intermediary targets are set that are very tangible, concrete, and if possible quantified. What do those look like, and what are some of the key questions there? Number three, you need to, as a financial institution, then once you've set a target, assess your portfolio of where it is today relative to that target. Where would your portfolio go? Would it evolve naturally? And what then are the types of interventions and measures and actions that you need to put in place as a financial institution to reach your target? And then comes the most interesting bit, which is you've put your targets in place, you need to implement them. You need to reach them, you need to shift your portfolios, you need to shift your policies. You know, how do you do that, and what are some of the options there? And then lastly, of course, how do you over time track and report on progress? So just a few, on the first question, ambition, a few just key aspects that I want to highlight. What's the scope of the FI emissions that we're looking at? Are we looking at scope 1, scope 2, or portfolio emissions? In our work, in PRI's work, in the alliances, we're looking at portfolio emissions because this is where financial institutions really have impact, influence, and they can make a real difference. If we are then looking at portfolio emissions, and what parts of the portfolio, what asset classes, what geographies, what sectors, in what order, and what hierarchy are being tackled? If we are looking at portfolio emissions then too, we're looking at the emissions of the portfolio companies, the clients and the investees on the financial portfolios. So what scopes are we looking at there too? If it's oil and gas, are we looking at downstream emissions? If it's power generation, do we need to look at downstream emissions or not? Or is it enough that we focus on scope 1? Those are some of the questions that need to be established at that point when we're setting emissions. What kinds of greenhouse gas emissions are we looking at? Is it only CO2? Of course, that's the number one priority, but are we looking at all of the Kyoto gases or all of the Kyoto GHGs, including methane, you know, which is now in the press, given, of course, large amounts of methane that are entering the atmosphere. And methane is a very important, very potent greenhouse gas. It's not only CO2. And importantly, when you're setting your level of ambition, net zero, yes, by a certain point of time, but are you also consciously aligning with the temperature outcome, which is really what it boils down to? So 2 degrees, well below 2 degrees. In all of our alliances, of course, we focus on 1.5 degrees. Then you need to set targets. Second step. Again, what pathway are you looking at? 2 degrees, 1.5 degrees. If it's 1.5 degrees, are you looking at the models of the International Energy Agency, or are you looking at the models from the IPCC? How much overshoot in terms of temperature overshoot this century are you incorporating into your target? Are these portfolio-wide targets covering, you know, in a cross-sector fashion, in a full economy type fashion, the full portfolio, or are these sector-specific targets? What metrics are you using? Absolute, it's been mentioned, intensity, financing, or more activity-based metrics such as engagement, etc. Now, I wanted to give a few examples of how this is panning out in some of the alliances, starting with the AOA. Each of the alliances that UNEP FI and PRI Convened have established, you know, they're highly negotiated, but also very ambitious guidelines as to how members of that alliance exactly need to be setting these targets, because targets is where the rubber hits the road. And in the case of the AOA, which is what you see here, so we have the target setting protocol, which is what documents this. There are 4 target areas. I'll speak to that in a few seconds. It covers at this point all major asset classes that institutional investors are exposed to. You can see them here. And most importantly, the level of ambition is the highest it could be. It's not well below 2. It's 1.5, and it's 1.5, a no low overshoot. This is the steepest decarbonization curve that's plausible. And so that translates into targets by 2025 having to be of a reduction of 22 to 32% in portfolio emissions, and targets by 2030 having to be of an order of magnitude of 50%, so 49 to 65% by then. So really steep emissions cuts for these portfolios in the AOA. Over time, other asset classes are being added on that you can see here. I just wanted to provide 2 examples that make the target setting in the AOA a little bit more tangible. So one is at the sector level, and you see that on the upper right-hand side here. Pension Denmark, one of the members, has set targets to reduce at sector per sector the emissions or emissions intensities, I don't know on this one here, oil and gas by 20%, utilities by 35%, cement by 10%, shipping by 50% in 3 years' time. And on the other corner of this slide, you will see how a member is setting a portfolio-wide target. In this case, it's the UN Staff Pension Fund, so the UN is walking the talk on this one, who has set a target to reduce its portfolio absolute emissions by 40% by 2025, only 3 years from today. On the Net Zero Banking Alliance, very similar, that we have guidelines highly negotiated by science-based documents on how targets need to be set. They're backed by all of the members in the alliances and all of the CEOs. Importantly, in the Net Zero Banking Alliance, the targets, again, same level of ambition, 1.5 no low overshoot are the scenarios that guide these targets. And what needs to be in scope of target setting is all balance sheet activities covering a significant majority of the bank's emissions, but also 9 key sectors that you're exposed to as a bank, you have to cover in your targets, and that includes all fossil fuel supplying sectors and all fossil fuel demanding sectors, supply and demand, and also sectors involved in land use emissions. There's other alliances, net zero asset managers, who also have put in place guidelines. And in this particular instance, the guidelines guide members of the Net Zero Asset Managers Initiative towards other frameworks, such as the Net Zero Asset Owner, the AUA's target setting protocol that I've just mentioned. This one I'm not going to cover in detail. This is the step number 3, assessing your portfolio and assessing the delta. Where's your portfolio now relative to the target? And because that's going to tell you what you need to do and how much effort you'll have to put into your activities and strategies. So let me come to that now, which is really the most interesting bit of operationalizing all of this. So when it comes to measures, there's really 2 areas that typically are considered 2 action avenues, implementation avenues. One is engaging, and the other one is reallocating capital. Now, on the engagement front, typically this will be company by company, and this has been done for many years. Shareholders have been doing engagement on climate change for some time. But there are various spheres of engagement. It doesn't have to stop at the company level. Why? Investors can also engage sectors through sector associations, to be a lot more systemic. They can engage policymakers, they can engage the investment value chain, etc. The good thing about engagement is that if it's successful, you will see an emissions reduction target that's pretty immediate in the real economy. Another good thing about engagement is that it can be done collaboratively. Groups of people of FIs and investors can come together and do engagement, both with policymakers and companies. The bad thing about engagement is it's brutally slow, it's very resource intensive, and when you have success with it, it's not necessarily at the systemic level. It's typically company by company by company. So it leaves us with the second area here of action, capital reallocation. The problem there is in liquid markets, capital reallocation is basically buying and selling shares and bonds. In a very liquid market, the assets you sell will immediately be bought by someone else. So what you're doing there is really decarbonizing a portfolio without emission reductions in the real economy. This changes, however, if a critical mass of actors are steering portfolios and reallocating capital systematically, because all of a sudden then companies have really strong signals and incentives to adjust their business models and make them compatible with net zero. So the impact might not be as immediate and direct, but it can be a lot more systemic, and it can be a lot more faster than with engagement. And I think FIs going forward, they need to use the best of these 2 worlds, combine them, and see what is best for impact and also what suits their portfolios and their strategies the most. My last slide is, over time, there needs to be, of course, accountability and transparency. So public reporting on progress is key across all of the alliances, and that public reporting on progress happens collectively at the level of the alliances, and some colleagues have already mentioned the progress reports of the Asset Owner Alliance and the Banking Alliance and others. And progress also needs to happen individually at the level of each member, which is a core requirement here too. So there you go. Those are the 5 steps of a practical as practical as it gets. operationalizing these net zero commitments. And now I'm going to hand it over to my colleague Sagarika Chatterjee, who's going to be from the finance lead of the UN high-level champions, who's going to be moderating an interactive panel on just these topics. Thank you very much, everyone.
Great. Well, is this on? Yeah. Great. Fantastic. Thank you so much. So welcome to this session that's going to focus on alignment with net zero goals, progress target setting, and transition pathways. And the objective of this session is really to turn to our individual financial institutions and go deeper into the practical work. And each financial institution that you're going to hear from is in one of the alliances and working with PRI and UNEP FI. My name's Sagarika, and I'm the High-Level Champions Finance Lead, and I'm also on the Gfanz Secretariat. And I'm really delighted to have with me fantastic practitioners and leaders in their field. On the far side is Hamid Amoura, who's Head of Responsible Investment at Mirabeau, and previously at BNP Paribas Cardiff, I believe. Welcome. And then we have Hayley Robinson, who is Group Chief Underwriting Officer at Zurich Insurance. And Hayley brings to this audience 30 years general insurance experience, including at RSA and Aviva. Welcome, Hayley. Judson Berkey, who's Managing Director and Group Head of Engagement and Regulatory Strategy and Chief Sustainability Officer at UBS. Welcome, Judson. And Judson is also on the board of EcoFact and also a TNFD member. And then last but not least, Claudia Bowley, who's Head of Responsible Investing at Swiss Re. Back in 2018, Claudia was on the European Commission's Technical Expert Group on Sustainable Finance, and she leads one of the work streams of the Net Zero Asset Owner Alliance and has played an instrumental role in the target setting approach. Welcome, Claudia. So just reflecting on what we heard earlier from Sheila, Eric, Mark, Eniko, and Remco, it's clear that we face very uncertain global geopolitics. And I think what was also made really clear is the critical role that the finance sector has in understanding net zero, but also making its voice very clear to companies and also to policymakers on what net zero would really look like. So just in terms of COP27, which I think, as Mark mentioned, is less than a month away, briefly on that, Mark mentioned many of the Gfanz publications that will be coming out that have been crafted with alliances and financial institutions. A couple of other areas that I wanted to flag that the champions are working on that are more topics that might seem more cutting edge, or you may indeed already be working on them, but we see as increasingly important to have in the priority list. And that includes how we finance the transition and also adaptation and resilience in developing countries, financing nature, and last but not least, of course, all of the work that's being done on the targets that you just heard from. And another thing that I wanted to bring in is the local context here in Switzerland. So you may have seen a paper that was recently out called Setting Sail for a Carbon Neutral Future, and that highlighted the high proportion of Swiss banks and asset managers, and also a growing number of insurance association members that are setting net zero targets and part of an alliance. So we started with the big picture. We went into fantastic explanation of the alliances and also what net zero targets looks like. Now let's turn to our practitioners. So we're going to start first with a bit about motivation, and then we're going to go deeper into the how. There is going to be a part of this that has audience questions, so please do get your questions ready. I'll probably come to those towards the end. So first, I just want to start with asking you a bit about the reasons for your organisation's public commitment to net zero. And I think Eniko highlighted 4 or so kind of areas for motivation areas for setting net zero. So maybe if I just start down that far end.
Yes, thank you for this question. I would say that this is a natural evolution of our process as we continue to improve our sustainability commitments and practices. We began formalizing our sustainability commitments in 2010 by signing the PRI and afterwards supporting initiatives such as CDP, Climate Action 100+, TCFD, and finally we signed the ENZAM early 2022. During the last few years, we have strongly reinforced and formalized our SRI approach, which is based on 4 main pillars. First, exclusion, active ownership, SRI strategies. We use different kinds of strategies. And last but not least, climate change. On this last pillar, climate change, we have designed and built our climate change approach around the 2-degree alignment and the Paris Agreement, mainly, but not only. We have also taken into account other factors such as physical risks, stranded assets, and climate solutions. So, thanks to this, more recently, we've launched a thematic fund focused on climate change in fixed income. And again, it was a natural move for us to join the ENZAM initiative.
Great, thank you, Hamid. And Hayley, if I could just ask you a bit about your motivation.
Yeah, thank you. So in 2019, Zurich was the first insurer to sign the business ambition for the 1.5-degree pledge. And then shortly after that became one of the founding members of the Net Zero Asset Owners Alliance with net zero targets to be achieved by 2050. Equally, we've committed as an organisation to be net zero in our own operations by 2030. So that when there was the idea of setting up a net zero insurance alliance in July 2021, it was an obvious next step for us. And as you saw on the screen earlier, as insurers, we have impacts on both sides of the balance sheet. So it's important for us to make sure that we're tackling both sides of that balance sheet. And also, I think I'd like to say is that, you know, this transition is not possible without insurance. Insurance underpins everything that our customers are doing on a daily basis. So that was part of our motivation.
Great, thanks you, Hayley. And Judson.
We started at UBS with our first climate strategy in 2006. It was focused on our operational footprint. In 2012, that moved to our investments and financing activities. But certainly it's great to have friends. And so joining one of the alliances has been very helpful to really accelerate that. And that acceleration I'd put down to 3 reasons, really. I mean, when you see 190 countries, including your own home country, set a stake in the ground, like with the Paris Agreement, you want to be part of that journey with them. Secondly, when you see your clients starting to transition themselves, you want to be their partner for that journey. And thirdly, it's an incredible opportunity. I mean, in some sense, it's the next chapter of the story of banking. UBS, as with many of our global peers, essentially traces its history back to the middle of the 19th century, supporting the industrialization of the countries that we're in. This is just what our countries need at this moment of time to be part of this transition. So we think there's incredible opportunity, and we want to seize on that opportunity and be part of that success.
Fantastic. And Claudia?
Well, so first of all, great pleasure to be here. Nice to see you all in person, and so far, very exciting event. So Swiss Re is a reinsurer, so probably pretty similar story as Zurich, but to go a little bit more into the detail, I mean, we insure or reinsure nature catastrophes, so means what happens with regard to climate change happens on our balance sheet, and to be honest, that's not fun. And therefore, for us, it is independent of is there an alliance or not a need to tackle climate change, because that is part of our business. But with the alliances, it helps tremendously to get that thing done, because this is a global challenge. It's a huge challenge, and we as a company on our own cannot solve that problem. We need all of you, And we need not only the financial markets, we also need the real economy. So ultimately, there we have a strong motivation. Why should we act? What we also do on the other side of the balance sheet, which is the asset side, we invest the money we get from our clients, premiums they pay. So it would be pretty strange, I would say, if we do not act consistently in our balance sheet. So that means if on one side we want to tackle climate change, but then on the other side invest in a way of like, as we would not care, that would not be a stringent approach, and it would not be very consistent. So that is our motivation why we do it.
Claudia, that's terrific. And you know, when I hear you speak, it sounds like you had long-standing work in this area, and that maybe I got this wrong, but that it wasn't so hard to secure the internal buy-in. But I did maybe just want to ask a bit. So, Claudia, maybe if I'll just turn to you, if I may. What is needed at a high level to try and secure that internal buy-in that you need to make the commitment to net zero, and in a way that you're going to join an alliance, you're going to implement and, you know, do a target setting, everything?
Unfortunately, it's not an easy thing, right? It's a journey, and as you have heard from all the other ones, they joined the sustainability journey a long time ago. That's the same with Swiss Re. And the first time when I had my first sustainability project in Swiss Re, it was not very easy. But what is for me very important is that steady, that you bring the topic steadily on the agenda, right? And people get used to talk about it, to think about it. That's one piece. And then specifically with regard to the alliance, it was really updating our CIO from the very first moment when this opportunity came up, to inform him about what are the requirements. Because it's not a thing like you join, you make the commitment, and then that's it, right? You really need to deliver things, and it's not always easy to deliver these things. So we need to make this information transparent, right? What is the consequences on the balance sheet? And really outline what are the benefits, because usually there are also benefits. And then I think that's a development ultimately.
That's very helpful. And Judson, you mentioned more on the opportunity side that you see. But can you just share with us a bit, when you think about where your clients and companies, you know, down the chain, where they are today, may I ask, is it you pushing, or is it coming from them, the mindset of opportunities and that there are in net zero?
Yeah, it's a bit of both. But I think what it does is it helps enrich that client conversation, thinking through, you know, what is their transition within their sector, within their company, what is their strategy to get there. And so in some sense, it just lets you know your customer, know your client better, and to work with them and support them. And yeah, sometimes it's us who raises the topic first. Sometimes they'll come to us to support a financing need. But in some sense, it doesn't matter, because once the conversation starts, it becomes that much richer of an understanding of your client.
Great. So we're going to turn a bit to the how. And Remco showed earlier, I think, on a slide, a couple of examples of different asset owners. So I think, Hamid, if I start with you, tell us a bit more about the net zero commitment that you've made and what's in it.
Yes, as previously said, we have been an ENZAM signatory since January 2022. Hence, we are currently finalizing our commitments and coverage. We plan to publish once our work is complete, before end of this year. However, a few observations before going any further to understand how we are moving forward on this topic. First, it's very interesting to observe that Pareto's law applies in the context of CO2 emissions. When we consider an equity index, for example, roughly 20% of the index is responsible of 80% of CO2 emissions. And it shows that the fight against climate change from a sector point of view must be conducted around the usual suspect sector, which are obviously oil and gas mining, utilities, etc. Hence, the importance of focusing on these key sectors again, but not only, without which the fight cannot be won. Having said that, it's also important to clarify that at this stage, we prefer to consider forward-looking metrics rather than snapshot metrics. Snapshot metrics could be used in order to calculate the carbon footprints of portfolios, but not really to take into account this kind of metrics in order to build a climate strategy. Focusing on looking forward metrics is key to effectively assess companies in their 2-degree trajectory. While a company's level of emission is high today, we base our analysis on whether the emissions will be decreasing in the future and whether the trajectory is aligned or on track to be aligned with well below 2 degrees. The trajectory, the pathway is key. To achieve this, again, active ownership and engagement in particular is a key component. It complements the relevant analysis of companies. Thus, we use both individual initiatives, engagement, as well as collective engagement through Climate Action 100+, CDP, and now Enzyme Initiative. We have, just a quick words, we have typically split our universe into 3 blocks. A first green block composed of eligible companies that have demonstrated their willingness to align with the Paris Agreement, and definitely this should make up the bulk of the portfolio. At the other hand of the spectrum, you have the block of companies not aligned with Paris Agreement, and definitely we don't invest in this kind of company. And between, the most challenging, the most important, the most time-consuming also, you have the block of on-track companies with which more attention should be paid. They are potentially eligible, and we are talking about companies whose emissions reduction efforts indicate a positive trend. And based on this experience, we are scaling this strategy across a range of projects to meet the ambition of Enzyme Initiative. And to conclude, maybe to share a figure with the audience, we can say that put aside the fund of fund and mandates, I would say roughly 30% of our AUM will be part of the coverage.
Okay. That's great, thank you. Hayley, could you tell us a bit about your set of commitments around net zero?
Yeah, so as you saw earlier, the Net Zero Insurance Alliance is the baby of the group, just formed in July 2021 with 7 insurers and reinsurers. And as you saw, we've had 22 join us since then. And what this group of insurers and reinsurers have done is commit to net zero on that 1.5 degree path with low or no overshoot. And that, as you heard earlier, is the most ambitious, the most aggressive that is possible. And we've all done that without knowing yet how we're going to measure and without having a target setting protocol. So I would say that shows a huge degree of ambition by the insurance industry. Just 2 weeks ago, as you heard, we in Zurich Insurance hosted PCAF and NZIA to put those measurements in place and those target setting protocols. And I would say we're probably about a month away from coming out and sharing that target setting protocol in a public consultation, which means we will deliver that by no later than January of 2023, with then each of us committing by July of 2023 to have set our targets. So from 0 to having set our targets in less than 2 years, I think shows the ambition that we're driving at in the insurance industry.
That's great, Hayley. And I just wondered that when you think about, you must have reviewed so much analysis, both pathways at the sector level, really thought about the implications if you're relatively close to at least, the guideline being out there in some way in the public domain. Is there anything, given you've worked in this industry for so long, that's been surprising to you about the analysis or the discussions that you've had in trying to reach a common view on what a good target setting approach could be for an insurer?
I think probably the thing that people probably miss is the sheer scale and scope of insurance. You know, we're trying to therefore find targets that work for motor insurance and, you know, commercial property insurance, which are very, very different, have very different customers. So it becomes quite a large and complex way of looking at things, but, you know, that's the challenge we've set up. And there's been some lively debate, as you can imagine.
I bet. So if I turn next to you, Judson, tell us a bit about the set of net zero commitments that you have.
Yeah, back in April of this year, for our balance sheet lending, we set pathways and targets for 4 sectors: our fossil fuel lending, our power lending or utilities, and then commercial real estate and residential real estate. For the fossil fuel sector, it's an absolute reduction, around 70% target by 2030, obviously 0 by 2050. For our utilities, it's roughly around 50% reduction target for 2030. Here we're benefited in Switzerland because the actual electricity grid is largely carbon-free to begin with, so we have a lot of good tailwind to us, but certainly further out towards 2050, going to be more of a challenge there. And then for real estate, it's around a 40% reduction for both commercial and residential real estate. And here we see the biggest challenges going forward, which I can speak a bit about later, because honestly, our pathways are above IEA pathways as we get further out into the end of the years.
Terrific, thank you. Claudia, tell us a bit about your commitment.
So as a company, we have on the underwriting side, we also are a co-founder of the Net Zero Insurance Alliance. Additionally, we also have on the operation side net zero commitments until 2030. And then on the asset side, it's also being a co-founder of the Net Zero Asset Owner Alliance. As the insurance side is already covered by Haley, I allow myself to just focus on the asset side. I think Remco showed before a very nice chart which comes from the target setting protocol, and I think that is the key ingredients of the Asset Owner Alliance when it comes to reducing our emissions. So ultimately, out of the 4 areas which he showed, which are engagement, finance, sector, now I need to think about the 4s. Oh my God, engagement, sector, sub-portfolio, of course. So you have these 4 areas, right? And out of the 4 areas, you need to set on 3 targets, whereas engagement is mandatory because, as outlined by previous speakers, the transition has to be done with the real economy, right? It's not just about cleaning up our balance sheets, it's about really tackling climate change in the real world. So therefore, engagement is mandatory. Swiss Re has set sub-portfolio targets to reduce the listed equity and corporate bond portfolio by minus 35% carbon intensity base year 2018. To be reached by 2025. We have engagement targets. We also have financing the transition targets. And let me quickly go a little bit into these 4 things, how they fit really well together. So the sub-portfolio help you to identify where are you today, where do you need to land, whereas engagement gives you the instrument to go that journey, to land there. So ultimately, as we know, 2018 is the starting point. We know we need to reduce by 35%, and we know we need to have that reached by 2025. We also know or can evaluate which companies are not yet on that journey. So for us, these are the first companies to go to engage with, so the real economy companies. However, they will give us the feedback like, yeah, transition is amazing, right? We want to do that, but it costs us money. And that is then where the Asset Owner Alliance Target Setting Protocol finance transition piece comes in. You provide money to enable them to make the transition. And that is another piece where we have set targets with green bonds, renewable infrastructure, and so on and so on.
That's great, thank you. And I just wanted to come back to our other speakers, because Claudia, focused on this idea of achieving impact in the real economy, and obviously a part of that is going to need to include managed phase out of unabated fossil fuels, as well as scaling up on the solution side and the transition side on that front. So, Hamid, maybe if I could just turn to you a bit on that. How are you thinking about this?
Yes, very important question, because first of all, I would like to remind that we must lead the right fight if you want to manage this issue effectively. I mean, the objective indeed is to decarbonize the real economy and not exclusively the portfolios. The difference is subtle but crucial. Let's not fall into the trap of decarbonizing the portfolio without considering its impact on the real economy. In other words, it's very easy to decarbonizing the portfolio by underweighting high emitters and doing so progressively year after year. Nice on paper, but no effect in reality. What is important is to select the right companies which by their own action will reduce their carbon emissions and thus the portfolio. This is the relevant process that needs to be applied. Having said that, let's come back maybe on the fossil fuel sector, regarding its very important sector. At this point, it's also very important to make a strong difference between thermal coal and oil and gas. To be clear, thermal coal is clearly excluded from our portfolios. This controversial activity has been added in to our exclusion policy from some years, and there is no debate. However, for oil and gas, the situation is a bit different. Why? We all agree to say that oil and gas is indeed one of the main issues in the short term. But nevertheless, this sector in the medium and long term will be part and should be part of the solution too. And the energy transition will involve onboarding this sector. And so that's why we keep this sector in our eligible universe, but we are very selective within the sector. We need to engage with these companies. Maybe just to share an example, from a geographical perspective, according to me, there is a huge difference between European and American oil companies. For an American companies, most of them, it's clear that in their mind that in 2050 they will continue to extract and produce oil and gas. For European companies, according to us, the situation is radically different. They have already accepted that before 2050, they will become mainly renewable energy producer. And so my conviction is that in the mid of the next decade, or 2040 at the latest, oil and gas and utilities will merge. So that's why we are focusing on our commitments with many European companies. And in this respect, we pay particular attention to two key indicators. The first one is the share of renewable energy in their capex and its evolution. And the second one is linked with the first one, the speed of change at which this energy transition is taking place. And applying a pragmatic and consistent analysis, we use mainly this approach to tackle the fossil fuel activities.
That's great, thanks, Simon. Haley, I know, again, your target setting guidelines still needs to get into the public domain, but with the conversations that you've had, or just for your own firm, how have you been thinking about the real economy?
Yeah, so I think we believe that it takes real economy, corporate action to decarbonize that real economy. So it's action by corporates that is going to make this happen. And that's why that engagement that was referred to earlier by a number of my colleagues is so important. And we are engaging with customers right across our portfolio from the highest emitting industries. We, along with a number of other insurers, have set out our own position on coal, oil sands and oil shale. And I think as you look at the ambitious targets we've got in the Net Zero Insurance Alliance, it implies a reduction, a phase down and a phase out of those fossil fuels. But it is up to each company and insurer to work out what does that pathway look like for themselves with their customers in their portfolios.
It's great, thank you. Thanks, Haley. So I wanted to turn now to one topic, which is credibility, which always sounds like a really big word, and it means different things to different people. I think in this context, there's an internal dimension to credibility. So everyone in the organization who has to do the implementation and may also bring very important insights in the process of developing a target and implementing it. And then there's external, and that bit's both the customers as well as the companies, and then also includes civil society. So Judson, if I could turn to you a bit, what does it take for a net zero commitment or set of actions to be credible, and how are alliances, the one you're working with, trying to embed credibility into their work?
Yeah, within UBS, we thought about credibility in sort of 3 different dimensions. One is obviously to be science-based, so choosing scenarios that are science-based. We went with the IEA scenarios, those are the often reference points used within the Net Zero Banking Alliance. Second is to focus on what's material, both material to the topic, to the climate transition, so they're clearly having targets in place early on for fossil fuels, for power. We thought we absolutely had to do those 2 sectors out of the gate. In terms of materiality to us as an institution, about half of our lending is in our real estate portfolios. We thought it would not be credible if we didn't put out pathways and targets for our real estate portfolio, even though we have a huge dependency there on essentially our clients, our customers. And the third element of credibility was to be honest about where this really is. I mean, we are not on a 1.5 degree pathway as global economies. So for us to do a nice 7% year-on-year reduction down to a 0 point, we didn't think would be credible. So as I mentioned, our real estate pathway doesn't go to 0 at 2050. It's above IEA. Because within Switzerland, about 60% of the real estate is still heated by fossil fuels. And we, with only not even 30% of the real estate market, do not have the ability to go in and dictate or mandate renovations of buildings. That's going to need to be organized across the industry and with the government and ultimately with our clients. So that needs to be very much a whole economy activity. So to be credible in our view, we had to be honest about where things really are, where they need to get to, and some of the activities that need to be undertaken really to put the wind in the sails of that transition.
That's great. And Claudia, the Net Zero Asset Owner Alliance, I think it was mentioned earlier, soon going to be approaching the 3rd target setting protocol, which I'm sure you are busy working on already. Again, with credibility, what are the key hallmarks, features for you of what a credible net zero commitment is? And how do you feel the Net Zero Asset Owner Alliance has been judged on credibility?
So for me, credibility is walk the talk, right? And that, from my perspective, comes with a strong governance, clear strategy, but then also measure and report. And not only measure and report internally, but make that transparent, right? So, at least for Swiss Re, right, what I mentioned beforehand, this long journey with our CIO, I think that enables us to have a strong governance because there was always these challenges, these conversations. Apart from that, we also have a clear strategy, not only on the climate point, but as this is the main focus here, on that one specifically. And then the last piece is about measure and reporting, right? We do report on the TCFD since 2016 to the public, and we try to be consistent, means have a steady reporting that you give comparability to the reader. With regard to the AOA, I must say, for me, it's the same ingredients. So do you have a strong governance? Do you have a clear strategy? And do you measure and report? And we look on what the AOA does. They have a, from my perspective, it's all my personal view, but I think they have a very strong governance. They just advanced their governance with regard to having what are the clear minimum requirements you need to fulfill being a member, which is on one side you need to set targets, and the AOA monitors really, do you have set your targets? Are they publicly available? And do you report on them? And they even have a mechanism created to monitor in case you do not have. They reach out to you, they exchange with you, and they, sorry for using the verb, push you to make sure you follow up on these commitments you made by saying, I want to be a member of the Net Zero Asset Owner Alliance. And of course, I mean, as it comes with all these credibilities, if you cannot uphold to the minimum requirement, right, it can happen in the future that someone doesn't fulfill these requirements, and therefore there is kind of a separation required. With regard to the target setting or to the clear strategy, I think the target setting protocol helps a lot, right? It outlines what is expected from the members with regard to target setting, with regard to what are the metrics used, what are the data used, and so on. I think that also enables then the reader of all these reports to make comparison, which is the ultimate aspiration, right? It should enable us to make better investment decisions. So and they also do the measure and the reporting, just mentioned by Eric, right? They released recently the second annual report on the net zero asset on lines. I think it's really, it makes me happy because I was part of the first one, and it's not a straightforward piece, I must say. So yeah.
Yeah, that's great. And Claudia, I don't want to turn the conversation political, but it strikes me that certain financial institutions have certainly been thinking about, wow, is this net zero for me? When they look at, the war in Ukraine, the energy crisis, potential recessions or existing recessions, debt distressed emerging markets and developing countries. So I just wanted to ask, within your organization, do you have colleagues that think like this? And Swiss Re is obviously going to do what it's going to do, but do you feel those kind of jitters ever within your colleagues working on this topic?
You mean the challenge between what happens near term versus what is required long term?
Yeah, that's right. Yeah. And can you guys do it? Do you have people saying, "Oh my gosh, can we do this?"
We have. Let's say it that way. These are risks for us, right? It's not just because we are nice and we want to save the world. For us, this is a real business risk. Climate change is a business risk, and it is on our balance sheet. And with any risk, and that is not just climate risk, we assess it and we come to a conclusion: can we keep it on the balance sheet, or is it too big for our balance sheet? Can we secure it? And there are certain climate risks or let's say certain identifications where we say that risk is too high. And as an example, we have that in the coal area, where we say if a company is 100% exposed to coal business and tomorrow regulators come in with taxes and so on, is this company still able to run its business, or does it get stranded? And based on these risks, can we then be invested in the company? So it's really a logic behind that. So therefore, on a long term, it's very clear. On a near term, it is a debate.
Okay, well, if I was in your firm, you'd convince me. So we're going to turn now to audience Q&A. And while you're getting your questions ready, just quick final question for our speakers before we go into this, which is, what's been your biggest organisational challenge to date, and what do you see being the biggest challenge in the next stage? And if we just have brief responses. Thank you, Hamid, first.
Mm-hmm. Yeah, definitely data.
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 Yeah.
Data has been and still is the real challenge. We are talking about the availability of data, its coverage, its reliability when available. And so in order to overcome this situation, we leverage and consolidate data and research from multiple sources in order to ensure the optimal coverage and holistic analysis. We use data from our historical provider for climate data and also other sources such as SBTI, CDP, Transition Pathway Initiative, PACTA, etc. So this is definitely the main challenge. Maybe I could also mention a second challenge of a more exogenous nature. It's true that the context of we have had to face in recent years wasn't favorable. Indeed, the COVID, the lockdown, the war in Ukraine were of a nature to clash with our calendars. But all these events have acted as a reminder that the climate emergency is real. The transition to a low-carbon economy will be for the good of all society, business, all stakeholders.
That's great. Hayley?
Yeah, I mean, I think data, I would say, is another one, but rather than choose the same, I'd say I think the challenge for insurers is as these new technologies and new investments are born in organizations and that they're prototyping new things, it's how do we as insurers understand those technologies, and therefore how do we insure them, and at what price, because normally we have lots of data, we have some history, and yet there is no history with the future, and there's not a lot of data. So we're going to have to be bold and innovative to support our customers through this transition.
Thanks, Hayley. Judson?
I'd like to highlight a cultural one. I mean, it's just not a very comfortable thing to be making a commitment 30 years out. We do 1-year operating plans, 3-year strategic plans, capital plans, maybe a bit further. So when you're making commitments 10, 20, 30 years out that you don't even know how you're really going to deliver, that's really an uncomfortable thing for senior management team to be able to do. But we did do it, and certainly it helps. Knowing that you're part of a group that's all trying to do the same thing, working through the same uncertainty. So, the Net Zero Alliances, I think, are invaluable to that work. And even at the end of the day, we're willing to go out for an advisory vote with our shareholders. And we didn't get everyone on board, for some of the reasons I cited before. But it's a big step across a bridge for a large firm, public firm, really, to make such a commitment, given all the uncertainties involved.
I'm sure. Claudia?
There are many, but I would say one which we identified just recently more is about the investment opportunities for companies as who have a fiduciary duty, let's call it as that, or who need to earn at market rate returns, right? And therefore, as an example, I very much appreciate what also the AOA does in that regard. With the position papers or the call for actions, just as the recently released one to policymakers about the blended finance vehicles. That was just launched 4 days ago, and I think that is also a win-win solution. So it's not only that we have pains, but we can also get solutions from the AOA. That is helpful.
Thank you, Claudia. So if you have a question, could you put your hand up, please? Oh, great. Okay, fantastic. Good. I'm going to take them one at a time, and I'll direct them at one speaker each, probably. Over there, please, and then I'll come to you. Thank you, and then you. Yeah. Sorry, just the gentleman over here, and then I'll come to you.
There's a lot of work going on net zero, but do you manage to work as much on other sustainability issues that also represent risks?
Great. So,
an important topic now is to what extent carbon reduction or emission reduction is putting biodiversity risks in the shadow.
great. So the question is around net zero, and are you also looking at other topics? And if I may, I might turn to you, Judson, if that's okay. So are you looking at other topics like biodiversity as well?
Yeah, sure. Obviously, a lot of the attention is going into climate at the moment, but every recognition that broader nature, biodiversity, rapidly rising up the agenda. As mentioned before, that I'm part of the TNFD, so I'm speaking a little bit in my book here. But I think we're absolutely recognizing that those two issues are absolutely related. When it comes to things like land use, deforestation, you can really solve for one and hurt the other, and vice versa. So absolutely, I think there'll be more and more energy going forward into bringing those together, and even bringing the disclosures together.
Great. And you didn't mention it, but I'd add into the mix climate and the SDGs obviously always go hand in hand. Great, over there, please. And if you don't mind, I don't know if that microphone just in front of you works, if it just goes on. Yes,
is it
fantastic.
working? Yes.
Yeah, thank you.
So hello and thank you very much. It's really positive to see that we have a lot of actors working on that topic. I'm Melissa. I'm working in a data provider firm specialized on climate and biodiversity. My question is the following. We are talking about a lot of top sectors as the energy sector, the coal sector, etc. But what about the other sector? For example, the ICT sector represents more than 4% of the emission every year, so as much as the aeronautic sector. I didn't look at the latest maybe paper, but when the net zero ambition is going to be extended to all of the sectors, because actually no sector is with low impact. And it's important also to consider not only the one that we think first about, but also the one that we do not think about as a transition risk, but to include it as well in this path to transition.
Fantastic. So Hamid, I'm just going to ask you that, because you talked a little bit before about sectors. How do you approach your sector coverage, and are you thinking about some of these maybe less obvious sectors like ICT in your analysis and your engagement?
Mm-hmm. It's a good point indeed. I mentioned earlier the Pareto law and mentioned that link between 20 and 80%. So that's why definitely focusing on high emitter sectors definitely is where we need to pay more attention. But it doesn't mean that we exclude the other sectors. And in our coverage, we have a look on all the sectors in order to see sector by sector where could be the pathway in order to reduce their own emissions. So definitely we have a look on all the sectors, but it's true to consider that the high emitter sectors should be first in our fight against climate change.
Great, thank you. More questions? Great. I've got one at the back, and I'll come to you. Thank you.
Hello, this is Peter Vanham at Fortune Magazine. A question for Justin Berkey. Say question 1A for you is, UBS has been recently put on a blacklist, I believe, by the state of Texas over its ESG investment strategies. How does that affect UBS's stance on Net Zero Alliance and other ESG-related themes? And then I guess my question 1B would be for Sagarika Chatterjee. Faced with this sort of anti-ESG, anti-net zero political movements, how does that, of course, affect your organization or your strategy when it comes to getting the finance sector involved, knowing that they're faced with these challenges? And the reference I can maybe make is to a Tribune de Genève article of yesterday, which sort of talked about the threat of several US banks leaving Gfanz as a consequence of this. Thank you.
Great, thanks. And maybe if I take a first stab at the question, and then you can have a think about if you're able to respond. So on the US, so I have to say I just came back from the US. I was there last week, and the biggest thing that came through to me from all the financial institutions that I met with is they are incredibly concerned about the US at the moment. ESG, climate disclosure, the SEC. Where is this going next? I have to say, I thought, I'm speaking in a personal capacity, I thought BlackRock's own response on this has been pretty punchy in terms of explaining why all of this is in line and needs to still happen and still staying behind the net zero transition. And I think it's just really important that we as an industry get together via the alliances and others to be extremely strategic in our own interventions on ESG with policymakers and regulators so that we get the enabling environment that we need, with data having been highlighted as one of the key topics, I think, with a few of the panelists here, that we can't afford to let this go. We're going to need the disclosure that we need for this transition at the corporate level to enable then the sector level transition and then the portfolio and balance sheet changes that are needed. In terms of the banks, because you mentioned the media stories that are leaving Gfanz. So I think I'd like to set the record straight on this. Again, I'll do this in a personal capacity, is that I'm not aware that there is an imminent flood of banks that are looking to leave the Net Zero Banking Alliance or Gfanz, and some of the anti-competitive practices-related risks have been resolved. We've clarified the language at Race to Zero around this. So again, I think I'd point to an increasingly difficult climate, which is where, again, not just what's behind the targets is important, not just media management, not just politics and our policy and regulatory engagement, but also some of the credibility factors. And I think some of those points that Claudia mentioned around our own governance within firms is very important. I'll just turn to you, Judson, if you would like to make any additional comments.
I think we're all on basically a bit of a new journey here, and so figuring out how this is going to exactly work and what the different roles are of, say, the UN and Gfanz and the coalitions and then individual firms. I think it's still a little bit work in progress, but in some ways I think it's good now if some of these things do get discussed and we figured out the balance between the different groups and how they do relate to each other. So I appreciate the picture that was up earlier. I don't think anyone really wants to get off of the road to net zero in any way. I think we're all sort of, as Claudia said, trying to manage risks, trying to support our clients in their own strategic transitions, trying to help our investors seize opportunities as well. And so I think we all do want to go on this journey together, but at the end of the day, if certain political entities decide certain things, then that's their choice. I mean, we are a private sector firm just trying to manage through. But I think in terms of the idea that someone will want to leave a coalition, I would hope no one decides to do that. I think there's great power in some of the work that's going on together. And my hope would be that running up to COP27, we could just maybe clarify a few things, how the different groups relate to each other.
Great, thank you, Judson. So that is a great segue for me to ask my question, which actually was pre-planned and not just in response, which is, what's the main benefit you've experienced from being in an alliance, and what's the top priority you have for the year ahead, either for your own organisation or, in relation to the alliance that you're a part of? Hamid, I'll start with you.
Well, joining Alliance allows access to robust science-based approach and as well as standardized methodologies. It's also an opportunity to collaborate with other investors. For instance, earlier this year, we were pleased to take part into the PRI listed equity net zero practitioner group, as it was a chance to exchange on best practices and setting targets, as well as on overcoming challenges related to methods, tools, and solutions to align our portfolios. The year ahead is crucial, as it will be marked by the communication of our targets, and therefore will be a first step in measuring our progress towards our net zero commitment. Regarding our day-to-day analysis and active ownership activities, climate disclosures and strategy will be at the heart of every dialogue and engagement with issuers. We are entering, and it's a strong conviction, an era where climate guidance is going to become as important, if not more important, than financial guidance. And last but not least, belonging a company, Mirabeau, which DNA is underpinned by independence, conviction, responsibility, and passion, we will simply continue to live up to our values and sustain our efforts in being accountable for the generation to come.
Great, thank you. Thanks very much, Hamid. Hayley.
Yeah, so I think for me, being at the ground with the launch of the Net Zero Insurance Alliance, I think it's the opportunity to make a difference. It's the opportunity to help drive change and a different approach for our customers. And insurance hasn't always been seen as the most forward-looking and dynamic industry, but I think we've got a great opportunity to show how we can help our customers through that transition, and that's a very powerful motivator. In terms of the priorities, I think the priorities for the next year are continue to help our customers through their transition journey and give them advice and support as they do that. But crucially, we've committed to setting our own targets by July 2021, so that'll be top of our agenda as well.
Great, thank you. Judson.
Yeah, as an individual institution, absolutely working with our clients on their transition, but also figuring out how to unlock that collaboration that's really needed across public policy with our peers as an institution ourselves. For the alliance itself, I think one of the things we really need to come to grips with over the next year probably are the facilitated emissions. Hasn't really been mentioned today, but obviously for a bank, there's a large advisory part of your activity. There is a PCAF consultation out on that right now, but I think you're coming to some view on how to actually think through the facilitated emissions part of our advisory activity on the capital markets will be important.
Great, and Claudia?
I would tackle it under two slogans, probably. One is about tackle the unknown. So we have an amazing pool of know-how and amazing sparring partners. And I think what we have covered so far in the target setting protocol is pretty, I call it straightforward, but probably even not for everybody. But now we really go into the areas with asset classes which have not yet been covered, you don't have the data, whatever. So in that way, I think having now all these knowledge together, I think that enables us to really make a step forward. The second slogan, which I will call, is stronger together. One thing is engaging on companies, but I think what we also need is the policymakers. And for the exchange with policymakers, I think it makes more sense to do that together. Just as mentioned, right, this paper we just recently released about blended finance vehicles. I think we need more of these. We need the policymakers to make this journey happen, and there I see a huge benefit of the alliances.
Great, thank you very much, Claudia. So as we finish, I hope you've really got a sense of the net zero landscape, the alliances that there are, and the critical role that they're playing across the finance sector. And for me, what really came out in terms of the practical benefits of being part of an alliance and why the financial institutions here today are part of these is we need to kind of move from, I think, what the leap of faith you described, Judson, to that intense granularity that's needed at every asset class level. And by doing that with an alliance, you get the harmonization of peers coming together, so an industry-wide approach, and you can go faster together and be more efficient. And I think some of the practical tools that were mentioned that have come out of the alliances include the target setting guidelines, and I couldn't agree with you more, Claudia, on policy engagement and advocacy that's needed. That's clearly going to be important in every key jurisdiction where financiers play a role. So thank you very much to our speakers. Thank you very much to PRI and UNEP FI, and thank you to you, our audience, and we're going to conclude this session. Thanks very much.